Let's start. So thanks for the attendees. Thanks for joining this webinar that will present results of several materials we have gathered at 2DI about the retail demand for sustainable financial products in 6 EU countries that include Spain, Italy, Belgium, Netherlands, Poland, and Sweden. And this webinar is to provide you with a kind of synthesis of all the results from, on the one hand, a quantitative survey, and on the other hand, some qualitative interviews and focus groups. So we're gonna address pretty briefly a series of topics that were tackled during through the different types of materials. So one part will be about the perception and beliefs regarding sustainable finance and the preferences of retail investors in those 6 EU countries. Second part will be on their perceptions and willingness to buy different sustainable financial solutions, especially green ones. And finally, the part 3 will be a bit different since it's an exercise of market estimation for different types of green financial products based on the appetite expressed in the survey, and also based on the actual compositions of the financial wealth of European households. So it's estimation exercise basically that leads to a conclusion that there is a huge potential for many green financial products. So most of the results you're going to see are taken from a survey that was implemented on 6 EU countries, and for each country we had like more than 1,000 people surveyed. So it means a total of more than 6,000 people surveyed. Plus, aside of that, we run a series of qualitative interviews and collective focus groups. You can find in that slide the basic details about those different materials. And you can have even more in the reports. So as I said, 6 countries are covered in this survey or in those different types of materials, and they follow another batch of surveys that were implemented 1 year before. So in late 2021 for the first batch, and the first batch was covering a group of another 6 countries, Ireland, Germany, Denmark, Greece, Romania, and Estonia. So it's a totally new group of countries, but we will be able to compare some of the results if the methodology was at least partly the same for the 2 different surveys. Plus, we added some new questions for which we will not have any benchmark. So let's dig into the results. So part 1 is about the overall perception and preference regarding sustainable finance. So in this section, we're going to discuss the stated interest of people for sustainable finance. So basically, people say, most of them at least say they are interested in sustainable finance. So you have much more people saying they are interested than people that are not interested. And you have a significant proportion of respondents that had no idea about it. They are not interested nor non-interested. So, but the picture here is that there are more people interested than non-interested. But that interest does not fully translate into a holding of sustainable financial products still, since a large majority of people still don't have sustainable financial products within their portfolio, or don't know if they do have those, which means there is a lack of knowledge or comprehension about what they own through the different channels, either directly or indirectly through investment funds or through life insurance or through pension funds, for instance. So only less than a third of respondents say they actually already own sustainable financial products. And when we move, you will see that in a later slide. When we move to the specific group of green financial products, it's even less, which is pretty logical. You have like 25% of people saying that they already own some green financial products. And if you go product by product, it's around 5 to 15%. What are the beliefs? So we asked a series of questions about the beliefs regarding sustainable finance. Is it a good way to express your values? Is it a good way to have an impact on the society or the environment? And is it a good way to improve your return or decrease your risk? So regarding the expression of personal values, it's pretty diverse. But still, you have more people saying, yes, it's a definitely good way to express your personal values than people saying the opposite. But here you see a very important fraction of people, like 40%, that don't know how to answer this question. So they have doubts about the potential of those products to help people express their values. Regarding impacts, the picture is roughly the same, and the answers are pretty correlated with the question before. So it's very diverse, very different positions, but still more people that have a positive belief compared to people that have a negative belief. So as you can see, more than 40% of people tend to think it can deliver an impact, while only 20% have a strong view that it cannot. Regarding returns, here again, it's diverse, but slightly more people thinking it can improve the returns compared to people thinking it will degrade the returns. So, but people are not super knowledgeable about this. Regarding motivations, so in research, we tend to consider that people could go to sustainable financial products for very different reasons, either for boosting their returns or for expressing their values or for generating some real life impact. So we were asking them, do they consider important for their different saving goals? And we distinguish 6 different saving goals. For each saving goal, is any type of sustainability motivation important to them? And what we see is that, at least on paper, in a very self-reported way, many people say, yes, it is. It is important to align with their values. As you can see, on average, so the blue line is the EU6 average, and you see the figures per country. And as you can see, for like 2/3 of respondents, it is important that their savings can align with their values. And as you can see, one country is ahead of the others, which is Poland. And you will see this pretty often in the results. Poland is very enthusiastic regarding sustainable finance, much more than other countries. And in the reverse, you have Belgium and Netherlands that are more pessimistic. Regarding impacts, roughly same picture, but a bit less pronounced. So it's no more 2/3 of respondents that say it's important, but only 55%. And across countries, we see 2 groups. Let's say the group for which it's important to have impact, which is Spain, Italy, and Poland, and the other ones that tend to consider it to be not that important. But keep in mind that on average, people are more inclined to search for savings aligned with their values than savings generating impact. So based on the answers, the responses of people for those different questions about the importance for alignment, the importance for having impact, and the importance of maximizing their returns, we were able to design 8 different profiles, and that were in which you can express the importance of one or several motivations. And what was clear is that it's pretty diverse, but in all countries, there is one profile that is the most common, which is the I want it all profile. investors say, at least they say, that it's important to them to deliver, to generate impact, to align with their values, and to maximize their returns. But that's, let's say, the very convenient position, like to want everything at once. Some were a bit different, like more than 50% of people were not taking that easy option and choosing only one or two sustainability motivation. But all in all, we see that for impact, which is something at 2DI we are very focused on, we have across countries between 40% and 60% of people saying that impact is important. Sorry. This is a figure I obtained by adding the different profiles that include the desire for impact. So keep this in mind, between 40 and 60% of all respondents are interested in a way or another to generate impact. And again, there are some countries that are ahead of the others, especially Poland. But it's not easy to have everything at once. So if they are forced to make a trade-off between the different sustainability motivations, the people that say, I want it all, choose first return, second values, and finally impact. That's a typical pattern that we already observed in the previous survey over the other 6 countries. And by the way, the distribution of profiles was pretty similar for the other 6 countries, with exactly the same. We had all countries with people interested in impact that were representing between 35% and 65%. So let's say a range a bit larger, but still the overall picture was pretty similar. And in the other batch, the country in which people were the most interested into generating a real life impact was also an Eastern European country. It was Romania. So people want a lot of things at once. They have 2 or even 3 motivations at once. And return is important for most of them. So if the satisfaction of their sustainability motivations imply them to give up some return, you lose some people. And the more they have to give up some returns, the more people say, I will not go for the sustainable option. I prefer the conventional option because the return gap is too wide. So this is what has been observed in such a question, in which we provide different scenarios with a different spread in return, and we see how many people choose the conventional option or the sustainable option. And the wider the gap in returns, the higher the fraction that finally decide to opt for the conventional non-sustainable option, which is pretty intuitive, but we wanted to see what was a fraction of people that is ready to abandon a lot of returns, and it's not that big actually. So as soon as the gap in return is like more than 50% of, let's say it's a bond fund that in its conventional form delivers a 3% return. If you decrease that return by 50%, so that it's now only 1.5%, you have lost most of the people. Now let's see how people how interested people are with going and switching to very precise sustainable finance solutions. So first, in the qualitative interviews, we asked, thanks to in-country representatives that were organizing the interviews and the focus groups, we asked to the participants a series of questions about their perception of different types of sustainable strategies including exclusion, best-in-class, engagement, impact, thematic investing, etc. And we observe their reaction and we let them discuss together to see if they were adapting their mind after adapting their position after the discussion. And many times the positions were pretty complex and ambiguous and having a lot of pros, but also a lot of cons. For instance, for exclusion, what was often said was it's a very easy to understand strategy, much more than other strategies. And it's pretty well suited to for people that want to strongly align with their values. But on the other hand, it's also pretty hard to implement because the limits of what you include versus what you exclude is pretty thin. And the criteria you can use are multiple. Is it based on revenues? Is it total revenues, or is it only, or do you start excluding after a certain threshold of revenues? Does it include your supply chain? So there are a lot of things to be taken into account. So exclusion is finally very diverse. And some people also pointed out that it sounds good to exclude the sectors that conflict with your values, but that can also lead to very negative side effects, in the sense that by doing this, you tend to contribute to decrease the market price of those sectors, which paves the way for other investors to buy them at cheap prices and make a return out of it. So it's not obvious you are affecting the behavior of the companies, and you help non-sustainable investors to maximize their returns. So some people were very uncomfortable with such a side effect. And what was also expressed is that to do exclusion, you have to be very clear about your personal values and to be very clear about what you really want to exclude. Because there are, as I said before, there are many forms of exclusion. So it sounds good on paper, but in practice, it can open a lot of discussions and internal debates. For best in class, there was once again a kind of mixed view, since some people did not get what's the point of going into the company, investing into the companies that are already doing well. To them, it didn't make sense. It wasn't following the right logics. And some also observe that by doing this, you reduce your investment scope. And by definition, you will reduce your diversification, leading to an uptake in the risk, which makes sense. But some others emphasize that it was a good way to incentivize company to be the best within their sectors. So there were opposite views as for quasi all strategies. So we could do that we did that, but I won't do it here, but we did that for a series of different strategies. Let's focus on one type of strategy, which is, let's say, impact investing strategy. So we asked the same. And here, what was interesting is that many people said that they were pretty suspicious in the capability to be sure that the companies could deliver positive impact, or the fund could deliver positive impact by investing in companies. So they were dubious about the capability to evaluate the ex-ante impact and to measure it ex post for the companies, but also for the products. So it was attractive in the sense that who doesn't want to improve the world? But doing this through some very specific investment products, they were pretty dubious, especially about the methodology. So they wanted a clear methodology, and especially a clear measurement methodology, which replicates something that was said about other sustainable strategies, for which they were expressing a doubt about the data that were used to select or exclude the companies. For best in class, many people said it all depends on ESG ratings, and they were not fully sure they can trust ESG ratings, which replicates some academic findings that the ESG ratings are pretty poorly correlated across each other, across different rating agencies, which means that it's not obvious the investors should blindly trust them, each of them. We also asked a pretty weird question, like, do you think you will have a superior impact through your savings or through consumption or voting or working? And we have very interested views on this. Like, people were more prone to say you have more impact through consumption than through savings, because for most people, consumption is just a larger fraction of their income that goes to consumption compared to the fraction that goes to savings, which makes sense. They also said something pretty interesting, that for social comparison and social imitation, consumption may be better. People imitate, according to some respondents, people imitate more the consumption behaviors of others compared to the saving behaviors. So if you want to emulate other people, it's better to try to do this thanks to your consumptions compared to your savings. That was an expected reasoning, which I think makes sense. Aside of that, many people said that, but probably you have more impact through your job, because through your job, you can leverage your position within a large organization. And if you are successful in making the company change its way of doing business, your impact is much bigger than your own single impact through your own personal consumption, which also makes sense. The leverage argument for work makes total sense. And finally, for voting, they were very dubious. They were saying it's more a symbolic marker of your citizenship than a real way to have an impact. And many people were dubious about the impact of voting because of the flaws in the functioning of democracy, the inertia, the short-term focus of politicians, and also the lobby's influence. So in terms of real impact, they were more positive for consumption or for work than for voting. Then we asked several questions about what was the perception of self-labeled impact products, especially impact funds. Because there are a lot of definitions of what an impact product is. Some definitions focused only on the intentions. An impact fund is a fund that wants to generate a positive impact. Some say it's not only this, it's intention plus action. So it's a fund that says it intends to generate a positive impact, plus it makes some actions that are very potentially impactful. And finally, some others want another condition to be fulfilled, which is a product that also measures its own impact. So for some people, the definition includes the intention, the action, and also the measurement. As you can see, the views on what current impact products are is pretty diverse. You have a lot of people saying it's only about intention. Some say it's about everything, intention, action, measurement. Some say it's only a fund that invests in companies with good impact, not even trying to improve their impact. So the views were very diverse, which means there is an overall confusion about what impact products are. We asked another question that was a bit twisted compared to this one. It was no more what impact funds are, but what impact funds should be, not to mislead investors. And here, there was a much clearer consensus saying that it should be a fund that wants to have an impact, does things to reach that goal, and finally, that measure its own impact. So the most common view was the most protective view, adding the three conditions: intention, action, and measurement. So people are not clear about what current products are, but are much clearer about what they should be in order to not to be misleading for investors. Another section of the survey was about the willingness to finance the energy transition, because the whole work was financed by LEVEL EEI, which is a European project that tried to increase the financing of renewable energy and energy efficiency solutions. So we have a dedicated section on the willingness of retail investors to finance the energy transition through various financial products. So what was clear is that the stated willingness is pretty high. As you will see, depending on the products, depending on the sectors, depending on the economic agents they could finance, or the zones, the geographic zones, it's like between 60 and 80%. So in terms of sector, there is a pretty high willingness across sectors, across green sectors, but the highest willingness was for renewable energy. Green building was like 10, 50 points lower, so around 55% versus close to 70% for the renewable energy sector. In terms of economic agents that could be financed through the savings, what was interesting is that it was often small economic agents like small municipalities or households or SMEs, and national public administrations and large corporations, not so much. Which is interesting because many current green financial products target the large corporations or the government. Let's say green bonds, for instance. You can buy green bond funds that invest in sovereign green bonds or corporate green bonds. And in that case, they are used to finance projects by governments, by states, or by large corporations. But if we ask people, they are more interested into financing small-scale projects from small public economic agents, including households. And so far, there is roughly no product doing this. So there is a mismatch between the preferences of investors and the product that are proposed to them by the financial industry. Regarding the zoning, the geographic, the appetite for various green projects in different zones, it was very clear that people have a preference for investing locally. So in the country or the city or region, much more than in other European countries, other developed countries, or other emerging countries. And so in the interviews, some people noticed the contradiction, like they have a preference, an inner preference for investing locally, but they know that probably the needs are higher in other zones, especially emerging zones. So they understood their own internal inconsistency between their willingness to have an impact and their preference for local investment. In terms of holdings, it's pretty limited. So it's about 1/4 of all people saying they already own some green financial products. And as you can see, Sweden is a bit, as for many questions about current holdings, Sweden is ahead of the rest. And if we go product by product, the products that are considered to be more often owned by people are the green saving accounts. So saving accounts for which the proceeds are used to finance green projects. And what is much less commonly owned are investment through crowdfunding platforms. So on the first for the first type of products, it's about 15%, and for the last one, the loans through crowdfunding platform, it's about only 5% of people. In all countries, we could notice a very significant attitude behavior gap, which is the willingness to invest in green products is high, around 50%, but the current holding is low, around 20-25%. For some countries, the gap is about 30%. For others, it's about 20%. There is a very large gap for Poland and Italy, in which the willingness to invest is very high and the current holdings is pretty low. You don't have that same attitude behavior gap in Sweden, where the current holding is already pretty high. If we ask people why they exhibit such a large attitude behavior gap, they tend to say that it's a problem of time, or of lack of time, or lack of expertise to know where to invest, much more than a problem of a lack of supply. So it's like the products already exist, they know about them, but they don't know which one to choose, and they don't have time to think of it. If we go product by product, the answers are pretty stable, which is which signal a novel appetite for green products. So the differences across, let's say, conventional green financial products are pretty thin. So the most popular ones are the equity thematic funds, with like 70% of people interested into those products. And green saving accounts are like 10% lower. So it's very, very, very close, between 60 and 70%. For more alternative green assets, like green private equity funds, green real estate funds, green infrastructure funds, the proportion of people interested is significantly lower, from 40 to 50% only. So people have a kind of a prevention against those non-conventional products. They will be most probably more inclined to switch to green products that are already familiar to them. And this paves the way for an exercise of market estimation. So based on the answers provided in the survey, and based on the current holdings of financial assets by the households, we got the figures from the ECB, from IOPA for life insurance, and from OECD for the pension funds. We were able to estimate a maximum market potential for various financial products, because we were thinking in terms of substitution from conventional products to green products. Let's assume people would completely switch from what they already own to their green alternatives based on their statement of interest. So it's a very mental exercise. And you will see that it leads to an estimate that is pretty high for many financial products, green financial products. And but it will be strongly dependent on the current composition of the financial wealth of European households. And here you can see how the financial wealth of European households is currently spread. As you can see with the bottom table, the largest portion of the current financial assets of households is held in the form of deposits. Depending on countries, it's from 10% to a maximum of 50% in Poland. And you have a lot of countries in which that fraction is in excess of 30%. So here, by nature, we have a very strong potential for the green substitute, which is a green saving account. For other countries, especially for the Netherlands, there is a super strong potential for products that could be bought through pension funds, because pensions account for close to 60% of the total financial wealth of households in the Netherlands. You got the same picture, but less pronounced in Sweden, where pensions account for 30% of total financial wealth of households. In other countries like Italy, what will be important is the holding through life insurance, because life insurance there account for 17% of the total financial wealth of households. It's not part of the survey, but France, for instance, is even more tilted towards life insurance, since more than 30% of total financial wealth of the French are through life insurance. So, and we had access to the current asset allocation of pension funds and life insurance across countries. The asset allocation figures were not super granular, but still it could provide us with a kind of proxy of the granular asset allocation that could be transformed into a green asset allocation. Because for each product, for each type of product, we considered some green substitutes. For instance, as I said before, for deposits, the obvious green substitute is a green deposit through a current account or a saving account. For debt securities that are held in direct, it could be crowdfunding in the form of crowd lending. For investment fund shares, all the products that all the green funds are eligible to capture that section of the total wealth of the households. And when it's already invested in bonds, the substitute would be green bonds. When it's already held in the form of equity funds, the substitute will be low carbon equity funds, or for a section of it, the thematic equity funds. So the methodology is very basic. We observe the current holdings and we think in terms of substitute, and we look at the appetite for substitution that was expressed in the survey, and we compute a product between the appetites and the current holdings. We end up with those estimates. So the total is huge for those 6 countries. So it's a matter of trillions. So it's 4 trillion for all green assets that could be held indirect or through investment funds, but outside of life insurance and outside of pension funds. If you add what can be owned through life insurance, you add another 0.8 trillion. And if you add what can be owned through pension funds, you add another 1.5 trillion. And because of the split of the current holdings of the households across Europe, for some products, you have a super strong presence of one or a few countries. For pension funds, it's obviously coming from the Netherlands, because the Netherlands are so different to the other countries. So there is a huge potential for green financial products owned through pension funds in the Netherlands, especially, and in a lesser extent in Sweden. In terms of product per se, as I said before, the maximum potential due to the current breakdown of the financial wealth is in green saving deposits, or deposits in green saving accounts, I mean. Okay, so I will leave you, for sure you will have access to the slides, and you will be able to see the figures in details, but keep in mind that the total equals more than 6 trillion that could be transformed from conventional holdings to green holdings based on the stated preferences of people. But for the share that will be owned through pension funds or life insurance, it requires the pension funds and the life insurance schemes to survey their beneficiaries and adapt their asset allocation based on the stated preferences of their beneficiaries. So there is a democracy exercise that has to be performed through across life insurance funds and across pension funds. Okay, so here you can find a wrap-up message that generally say that there is an appetite, especially in some countries like Poland. The level of knowledge is pretty low. That was not in the slides I presented, but through other questions we could access that, and it was also repeated again and again through the interviews. So far, the ownership is pretty limited, around, depending on the product, between 5 and 15%. And in total, let's say up to 30%. The perception of the different strategies are very diverse, the same as the perception of what impact products are. But there is a more consensus, a clearer consensus of what impact products should be. And as I just said, there is a massive potential for green financial products that is currently massively untapped. And if we try to single out the differences across countries, as I said, you have a much stronger enthusiasm in Poland compared to other countries like Belgium and the Netherlands. The interest for impact is the most obvious in a few countries like Spain, Poland, and Italy. One country is ahead of the others in terms of holding of green financial products, which is Sweden. And depending on the current asset allocation in the different countries, you have a larger potential indirect for some countries or through pension funds in others, especially the Netherlands. So I hope it was clear, and now I will welcome your questions or feedback. Thank you. Anaïs, are there any questions?
I don't see any for now.
Okay. So anyway, we will release the slide deck for the to the participants.
Well, I think if we don't have any questions,
yeah, we can. Yeah, we can stop the meeting.